Monday, March the 14th, European stocks spiking to session highs. Bloomberg Markets starts right now.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
So only 4 hours separate New York and London, hence we will not do a European close in this hour. But let me update you on where we are with the markets as we effectively count you down to that ending of the day here in Europe. The stock 600 up by 1.85%. We're spiking to the upside within the last hour. What we are, though, seeing is the sell-off continuing in the bond market. Yields continuing to move ever higher in the Eurozone, particularly in Germany. We're up another 9 basis points today. 0.34. That's a positive 0.34 on the German 10-year. But look at the move that we're getting in crude right now. We're seeing it over in the United States, sub 100. Brent crude trading 104.07. We're down by 7.5%.
Yeah, Guy, you stole my thunder there. You're talking about Brent crude, but WTI seeing some pretty strong moves, briefly dipping below $100 a barrel. And you can see that's actually positive for the S&P 500. Remember, they have that inverse correlation now as investors become even more sensitive to potential commodity shocks. And you can see a little bit of that inflationary idea, that risk-on idea coming out in treasuries as well. A little bit of a bond sell-off, yields higher by 10 basis points, of course, ahead of that Fed meeting that we're getting on Wednesday. But it's not alone. As you see that flight from treasuries, you also see a flight from gold as well, down now below 2,000 again, 1957 at the level. It's interesting to see how this is working. This is the trade today that's dominating. It's the exact opposite of the trade that we've seen in the last couple of weeks, Guy.
Well, let's talk about what is happening with the central bank overlay around all of this. Huge week, as we know, for central banks globally. The Federal Reserve, obviously front and center, expected to begin raising interest rates Wednesday. We've then got the following day the Bank of England as well. It's expected to hike by another 25 basis points. That would be the third meeting in a row. We had the ECB last week turning significantly more hawkish, judging by the language that was delivered in Frankfurt. With us now, the chief European economist even at PGIM, Catherine Nice. Catherine, nice to see you. Thanks for taking the time to join us. The Fed's going to hike this week. The Bank of England's going to hike this week. The ECB turned more hawkish last week. Give us your sense of where we are with these central banks, particularly when it comes to the European economy, the UK and the Eurozone. How much of a rate hiking cycle are we going to see here? Is it going to be just a couple, 1, 2, 3, maybe done, and then we start to see the possibility of a recession coming down the pike towards us? What is your expectation here?
Well, it's a tricky spot for central bankers because clearly this is a negative shock that is going to push down, other things equal, on economic activity, but push up as well on inflation. So it really creates a dilemma for central banks. And that's common across all the major central banks you were talking about. But that said, there are important nuanced differences that I think are worth highlighting. You talk about the impact of the conflict on the outlook for these central banks, which was already tricky going into this conflict. Starting with the ECB, given that they met last week, this is clearly a very negative shock for the Eurozone. It's also pushing up on inflation there. But given the huge uncertainty, the proximity of the Eurozone to the conflict, I was surprised by the ECB's decision to announce a faster taper. So at the margin, I would have expected that they would have, waited it out to see how things evolved in Europe before taking a decision. But clearly, they're focused on ending their purchases of asset taper. The situation for the UK is very different. We're seeing here signs of nominal wages, inflation expectations, really running at rates that are above the level consistent with the MPC's inflation target. So I expect the Bank of England to still be on course to raise rates at its next policy meeting, but we might see a shallower and slower hiking cycle here in the UK.
Catherine, one of the concerns just in the last couple of months has been this divergence in policy between the United States, between Europe, and between the Chinese central bank as well. I'm curious now, with the introduction of the Russian invasion into Ukraine, what does that actually mean in terms of the policy divergence between the United States and Europe when you do start to see Europe far more exposed to Russia than the United States is? Does that change the playbook at any point?
I think it does. And we also have to remember that Europe going into the conflict, yes, was in a good place in terms of the economic recovery. It was strong. The labor market in Europe is strong. And so that's a bit of a saving grace going into the conflict. But we shouldn't get ahead of ourselves. Europe, unlike what we see in the US, has economic activity at levels that are really quite some way below potential still. And this conflict is likely to slow the pace at which we're going to get back to potential. So it risks not just increasing near-term recession here in Europe, but also long-term economic scarring coming out of these crises for Europe. So quite a different picture, I think, over here in Europe compared to the US.
Catherine, we're going to have Eurogroup finance ministers meeting this evening. There is a growing expectation that we are going to see a fiscal response to this crisis. What does that fiscal response look like? How big do you think it could be? How quickly does it come? And if we do get a substantial package, does that make it easier for the ECB to hike more aggressively?
Well, the ECB's decision last week, I think, does put more pressure on fiscal, and you know, rightly so. If Russia invades Ukraine, there's really not much the ECB can do to support vulnerable households or struggling small and medium-sized enterprises. And that really is something for the fiscal authorities. For now, we've got little by way of detail, as you alluded to in your question. It looks like it's really going to be up to national governments, at least initially, to think about how to compensate households and firms. We might see some front loading of these next generation EU funds, particularly the loans component, into, let's say, 2023-24. But I think a really big fiscal expansionary package funded by EU debt is we're not quite there yet. I would expect you'd need to see some pretty serious downside risks crystallizing before we were in that place. So for now, a little bit here, a little bit there, national government's in the lead.
Catherine, let's talk about the scary R word, and that, of course, is recession risk. What are the odds that Europe goes into recession? What is the timeline of that probability?
So, as we discussed, clear major downside shock to economic activity for Europe, and it's really tough to quantify because the actual size of it is going to depend on a number of factors. We talked about energy. Clearly, if these flows of energy through the long-term contracts or an orderly transition away from Europe's dependency on Russian energy can happen, maybe then the impact is more muted. But if we saw a more disorderly situation where the flow of energy were to stop from one day to the next, the economic impact would clearly be a lot bigger. You've got other amplification channels at play here as well that are really tough to quantify. You've got confidence effects, and very importantly, we've got supply chain effects here. So it's not just energy, and this is coming on top of already very high supply chain disruptions coming out of the pandemic. So this could lead to some non-linear, pretty big impacts on economic activity.
Catherine, how much greater did the central bank problem get with the shutting down of the fourth biggest port in the world of Shenzhen? How big a problem is that going to be? And is it possible to get an idea of the extent of the impact that's going to have in terms of the inflationary read across?
This is a great question. I think the best thing we can say is we did learn something in the pandemic that I think can give us some indication about how bad this could be. We learned that these supply chain disruptions are bigger, longer lasting than we expected, that they are non-linear, and we're getting disruption also in new areas, in food, for example, through fertilizers, all the way up the food chain. And we know that households are clearly very exposed to food prices through the consumption basket. So this is just opening up another channel through which households are really going to be squeezed, another downward impact on economic activity, another challenging layer to this whole mix of this shock for central banks to deal with.
Catherine Nice, PGIM Chief EU Economist, we thank you so much for your time. Coming up, the U.S. is increasingly concerned about the role Moscow's most powerful diplomatic partner could play in the Ukraine war. We'll look at China's influence with Chris Johnson, President and CEO of China Strategies Group. That conversation's next. This is Bloomberg. U.S. officials say Russia has asked China for military assistance to support its invasion of Ukraine. The Kremlin, meanwhile, has denied the reports, insisting Russia has all the resources it needs. Here with more details is Chris Johnson, President and CEO of China Strategies Group and a former China analyst at the CIA. Chris, thank you so much for joining us. Let's draw on that experience at the CIA. What do you make of this report that Russia has reached out to China?
Well, my sense is that the U.S. side has very good intelligence on this, coming from the Russian side. And so, of course, the interesting thing is two things. One, what do we know about the Chinese response, which so far is nothing? And two, what does it mean for the Russia-China relationship that Russia would make such a request? And in my assessment, that tells us that that relationship is now certainly the closest it's ever been since the Sino-Soviet split in the late 1960s. It also tells us that, however, that China is indisputably now the senior partner in that relationship, and that we see that Russia is coming to them for support.
What assistance would China be prepared to grant Russia at this point, do you think, Chris?
Yeah.
Clear.
Chris, let's quickly talk about, I feel like we have some technical difficulties there. Let's quickly talk about what assistance China can actually give Russia, especially when Russia, I believe, is the #2 exporter of arms around the world. What's your take on that?
Well, that's true, and that's another indication of the changing status of their relationship. For years, of course, the Chinese were importers of Russian military equipment. One of the most fascinating things, of course, though, is that they began reverse engineering that equipment and improving it to the point where now actually they make far better weapons than the Russians do. In terms of the type of equipment they're probably asking for, most of it would be standard munitions, things like mortars and other what we might call dumb bombs, as opposed to precision-guided munitions. But there's also been some speculation that they're asking for Chinese help with drones, which of course would change the battlefield space in Ukraine quite a bit. In terms of what the Chinese might be willing to do, to the degree they were ever willing to consider this request from Russia, my sense is now that they've been outed, if you will, in what appears to be another good use of U.S. intelligence making that information public, it would seem very dangerous, obviously, for them to do that, because if they were to support the Russians in this case, it's hard to then see how the U.S. government would not begin to view them as almost an enemy combatant in the Ukraine situation.
What would the economic implications of that be? We've seen what's happened to the Russian economy and the kind of sanctions that have been applied. Would that be something you would expect, therefore, to happen to China were it to supply weapons, become, as you say, a potential combatant here?
Well, I think this is the fundamental question. In fact, as we've been seeing over the last couple of weeks, there clearly is a grouping within the Biden administration, largely seemingly being led by the National Security Council, that is putting out the narrative that this is now a new axis between China and Russia, a name meant deliberately, I think, to be resonant of the old Axis powers in World War II. And therefore, the same ferocity, if you will, and the same tools, including SWIFT and so on, should potentially be applied to the Chinese as yet another autocracy in this battle between autocracy and democracy. That group is making its case. We don't know if they are convincing the president yet at this point, but things like this disclosure about the Russian ask certainly help those people advance that case. So we could see very serious consequences for China, which in my mind is all the more reason why they'll have to say no to this Russian request.
Chris, this isn't the only kind of geopolitical tension that China is dealing with. We know there's been a trade war in the background that has really lasted years. Even the onset of the Biden administration hasn't necessarily decreased tensions with China. How does one, from an investor point of view, really square, I should say, the tensions between the United States and China instead of trade and the tensions between the U.S. and Russia in terms of the invasion?
Well, that's a very difficult question and an important one. My sense is there's a great risk, really, for U.S. policy in making a determination to treat the Chinese exactly like the Russians. The facts are we have a very different relationship with China than with Russia. There's much greater economic interdependence, as you suggest. And so for investors, there were already questions, right, being raised about whether China was investable, given the property crackdown in China, the attack on the internet companies last year in China, and so on and so forth. And now this seeming decision by the leadership in Beijing to align itself very closely with President Putin is going to make investors even more skittish. So it's something that folks are going to have to consider very carefully.
Chris, Russia's external reserves were thought to be a war chest that it could use to survive the sanctions onslaught that it knew would be coming.
Right.
China's foreign reserves are a different order of magnitude. What do you think you spoke a moment ago about the potential for sanctions, financial sanctions. What do you think what do you think the authorities in Beijing are doing right now with relations to those foreign reserves? Do you think there is a possibility of a significant reset, a huge shift of those reserves, potentially into other assets? That would be a massive financial tectonic shift for the global economy.
Yes. I think because of their interest in stability, we wouldn't see that in the short term. In other words, this has always been the issue, right? In that there's been a case for many years that China has a sort of nuclear weapon with regard to divesting itself of its US dollar holdings. But of course, that nuclear weapon also detonates on them if they were to do that in any kind of a rapid situation. My sense is, though, that this is a risk that hopefully the Biden administration has been thinking through in its approach, which is that when you go from zero to partially unplugging Russia's central bank in the course of about 60 hours, you send a very strong message to countries like China that you could be next. And most certainly, we've been seeing for some years now increasing concern among Xi Jinping and the other leaders in China of what they call financial war by the United States, the U.S. using those capabilities that they have in terms of the dollar-denominated international financial system to attack China and hold down its rise. So we should expect over the course of the next few years them to be making serious efforts to attempt to de-dollarize over time.
Yep. Major implications if they start doing that. Chris, thank you very much indeed. Chris Johnson, President and CEO of China Strategies Group. Thank you very much indeed. Coming up, 18 minutes of trading chaos. 18 minutes that broke the nickel market effectively. We're going to see how long it's going to take to get back on track. There's a deal being done in terms of financing the short positions that the Chinese fund at the center of all of this had in place, and whether or not those continue. We'll discuss all of this next. This is Bloomberg. So the metals industry hasn't seen this kind of turmoil since the tin crisis of 1985. Last week, we saw the price of nickel soar 250% in little more than 24 hours. That led to billions of losses for traders who had bet the wrong way, i.e. being short. That then ultimately prompted the LME, the London Metal Exchange, to suspend trading for the first time in 3 decades. The question is, what is it going to take to reopen the LME for nickel trading, and what is the long-term damage to the LME? Jack Farchi's been front and center on this story for Bloomberg News. Jack, you've been reporting that Chang Guangda, the funder at the heart of this, has been seeking a package of financing basically to cover the margin call that was at the center of all of this, and that may be making progress. That is what is required to reopen the nickel market?
I think one way or another, there needs to be some kind of resolution of this big short position that this company, Tsingshan, as you said, Chang Guangda's company, has in the market. People need to understand that we're not just going to have a repeat of the margin calls and the short squeeze that caused the market to go up to 150%. That's not just going to happen again as soon as the market opens. So something needs to happen. One option could be this kind of financing package that we're reporting today, led by JP Morgan, which essentially the banks come in and give him enough money to be able to weather any further turmoil in the nickel price.
Jack, does he, in that scenario, does that fund stay short of the nickel market?
Well, certainly he's been saying, I mean, we reported last week, he told the banks that he wants to stay short. So that's what he's been saying. Exactly what he does next, I think, will be very interesting to see. We don't really know yet. And just one thing to say, it's important to note, he's not a fund. He owns the world's biggest nickel producing company and stainless steel company. So he has some physical nickel that he's producing in the ground. The problem is he can't deliver it in time to the LME. So he's got himself caught in a short squeeze.
Jack, it's Creedy in New York. Is there any kind of precedent for this? Has this ever happened before?
There have been lots of short squeezes on commodity markets on the LME before. I don't think I've ever seen a market that has gone up, a serious commodity market that is a global benchmark that's gone up 250% in the space of little more than 24 hours, which is what happened to nickel last week.
How much damage has been done to the LME as a result of all of this, Jack?
Quite a lot, I would say. We reported last week, there's an awful lot of big names in finance, big hedge funds. We're reporting in this story today, Goldman Sachs, who are very cross with the LME, particularly for this decision that was taken not only to suspend trading, but crucially to cancel trades that had already taken place. It's something like $4 billion worth of trades, which happened on Tuesday morning, and the LME decided just to cancel them. I think it's going to take a while for people to want to trade on the LME again, and there's going to be some who say, actually, if the exchange can come along and cancel the trades, not because there was a fat finger or an algorithm glitch or something like that, but just because the price went in too extreme a direction, how can we trust that won't happen again? How can we ever trade on this exchange again?
Well, Bloomberg's Jack Farkey, fascinating stuff, a wild story indeed. Thank you so much for your time, folks. You can catch his big take on the Bloomberg terminal. This is Bloomberg. Diplomacy took center stage today in the war in Ukraine. Russian and Ukrainian officials resuming their talks, this time by video link. And U.S. National Security Advisor Jake Sullivan started talks with China's top diplomat. Meanwhile, the fighting continues. Aggie Cantrell joins us from the border of Ukraine and Poland, where thousands of refugees have fled. Maria Tadeo as well in Brussels, where Euro area finance ministers are meeting about the economic impact of the war. And Anne-Marie Hordern, our Washington correspondent, where the Biden administration is figuring out its next move. We start on the border of Ukraine with Bloomberg's Aggie Cantrell. Aggie, give us the kind of take of what's going on the ground.
Hi, yes, so on the ground there are still many people coming over the border from Ukraine into Poland, and it is clearly a big concern on the part of Poland that they managed to streamline getting people into the country as quickly as possible, and also managing to secure the resources and financing to make sure that Poland can sustain these large inflows of people. The bulk of people who have come to the EU have come to Poland, and we're now seeing today, actually in a couple of minutes, the Deputy Foreign Minister will be on site here at the Medica border crossing in order to discuss what the Polish government can do with the European Union in order to make sure that the refugees who are coming here can remain here in a secure way and have access to the labor market.
Aggie, the Russians attacked a Ukrainian base just the other side of the Polish border, 15 kilometers, I understand. What are people saying where you are now? How much fear is there that a Russian weapon system goes wrong, that the guidance system goes wrong, and it ends up on the wrong side of the border?
So speaking to people on the ground here, Polish people here, they don't seem to be particularly concerned with the cause of this attack. However, this attack does sort of show the fact that this isn't just something that is isolated to Ukraine, because there is this risk that something could hit at the other side, but it isn't really something that people believe is really going to be happening anytime soon, because of obviously the escalation that would take place if, for instance, something on the Polish side of the border was hit.
Yep. Accidents do happen, though, in war, unfortunately. Aggie, stay safe. Thank you very much indeed for your reporting. Aggie Cantrell joining us on the Ukrainian-Polish border. EU finance ministers gathering in Brussels this evening to discuss the economic consequences of the war in Ukraine. There's a new sanctions package that is being unveiled as well. Christian Lindner, the German finance minister, speaking to Maria Tadeo a little earlier.
All options are on the table, but we have to seriously consider which mean puts pressure on Putin and which mean could harm ourselves more. This leads probably to a differentiated approach concerning the energy imports to European Union and the US.
Maria joins us now. Maria, this is the fourth package of sanctions. What is included?
Well, you know, we're about to find out, but I did speak with the German finance minister, but also the head of the Commission's package sanction unit that is looking at this, Valdis Dombrovskis, who, by the way, is from Latvia. So this is something that really touches his heart. And he told me, well, no one is untouchable. And of course, we are going after the oligarchs. We know that in that package that is set to be unveiled and approved, there are names like Roman Abramovich that is being floated around. And some of the indications on the ground do seem to point that he will be now targeted. Mr. Dombrovskis also told me we are going to go after everyone that tries to circumvent our sanctions. And of course, this fits very much into the story that I'm sure Anne-Marie will now debrief for us, which is, of course, concerns that countries perhaps like China and other individuals could try to help Russia at a time in which the European Union is really trying to inflict maximum damage. Of course, there's no mistake here. This maximum damage will have an impact on the European economy. That's a message I've picked up from pretty much every finance minister here, suggesting that, yes, there is a possibility that Europe could enter into a recession. The risk of banning oil imports from Russia is that it could really damage the industry. But the real point here and the real debate is how far can you go, make it effective, but also try to protect your economy. And I can tell you there is not consensus on that. When you speak to Eastern European officials, they are worried, in fact, about Russia moving westwards. When you speak to some of the Germans, the Dutch, perhaps to the Austrians, well, they do worry about the fallout that this could have in Europe. So we're yet to get a very united response from them.
Maria, you hit it right there. Russians' outreach to several other countries in the world. Can you speak to the European response, or European concern, I should say, when it comes to Russia outreaching to perhaps China, perhaps to Iran? We know that the Russian and Iranian foreign ministers are set to meet in Moscow this week. What is the European take on that?
Well, you know, it's funny to me that the language here has not been as severe as that coming from the United States, which directly spoke to China. Remember, there is now a very tricky relationship between the European Union and China. There is a trade deal that has been suspended. Many will tell you it's now officially dead, but this is still a big country with big commercial links to the European Union, and in particular countries like Germany. So when I asked, would you target China? Would there be repercussions for China? Well, the message, not going into specifics, is that we are going to be looking at loopholes, and we are going to be looking at countries that are trying to circumvent this. But there was no specific reference to China. A lot of this has to do, of course, with the fact that some in Europe, perhaps naively, still expect that China could act as a mediator in this to try to pull back Vladimir Putin from what is now a 19-day war that, of course, we're seeing does very severe damage on civilians. The Kremlin denies this, but of course, we have seen the pictures, particularly in Mariupol, and that bombing in a maternity ward last week really shook conscience here in Europe. There has been a real concern about a war that escalates not just on the military front, but also on the people of Ukraine that have been besieged now for almost 20 days.
Bloomberg's Maria Tadeo, fantastic reporting. Thank you so much for your time. Joining us now is Bloomberg's Anne-Marie Hordern, our Washington correspondent. Anne-Marie, let me put that same question to you. The idea of Russia, the outreach that's going to China, meeting with Iranian officials, what is the American take on that kind of outreach?
Well, I think you have the foreign minister of Iran going to Moscow. Also, we just had the Qatari foreign minister leaving Moscow today. He met with Sergei Lavrov after he spoke to both Secretary of State Blinken over the weekend and the Iranian foreign minister. I would say, Kriti, this is more about the Iranian nuclear negotiations, which really were getting what many would say very close to potential final agreement. And then, of course, with the Russian invasion of Ukraine, Russia had come back to the table and said any sort of sanctions that we are dealing with cannot impact our relationship with Tehran. So now you have all of these negotiators, which were in Vienna, going back to their capitals. So I imagine that outreach from Iran to Russia is really about for the Iranians to want to figure out where the Russians are now when it comes to the nuclear agreement. But Iran, as you say, is a friend of Russia, similar with China. But China, of course, is going to be the bigger player here. The issue for China is that they have been walking this line. They don't want to outright condemn the actions, but they neither can support it either. They want a veneer of neutrality, which is why when you have reports in the press that Russia is asking China for military arms, the Chinese have come out and said that's not true, this could potentially be very difficult for Xi Jinping.
What do you expect the readout from this conversation between the Chinese and the US to be today, Anne-Marie? What is the primary objective of Washington in this conversation? I'm trying to understand it. Is it basically to warn China of the implications of helping Russia? Is it to try and get China to help with Russia? I'm really curious as to kind of what the primary objective for the American authorities will be.
I think it's both. It's fair to say the sanctions that the West have implemented on Moscow and the Russian economy are hurting Russia. At the same time, they have not stopped President Vladimir Putin's war and invasion of Ukraine. If anything, he's dug in his heels and it's gone worse, considering what we saw over the weekend, especially bombing near the Polish border with Ukraine. So I think on the first stance, they want to do anything they can to try to see if Beijing is willing to flex their muscles and this friendship. Remember, it was just early February when Beijing and Moscow had this new decree that they have a relationship of, quote, no limits. So potentially Xi Jinping can put his thumb on the scale there and push Putin to try to bring it back. And then twofold, they're going to make sure that China knows that they need to get in line when it comes to the Western sanctions regime. A number of officials have said this. Gina Raimondo, Secretary, said this last week as well, making sure that companies are on notice that they need to not usurp those sanctions, because Russia is immediately going to look to their partner and friend to try to get a way around those sanctions and make sure they continue some trade. But China has a lot more trade with Europe and the United States.
Absolutely. Huge risks for Beijing. Anne-Marie, thank you very much indeed. Anne-Marie Hordern reporting from Washington, D.C. Coming up, we're going to take a look at the impacts of those sanctions on Russia. It could be on the verge of its first default in more than a century. More next. This is Bloomberg.
I'm Rishka Gupta, and you're looking at a live shot of the principal room. Coming up, Patrick Palfrey, the Credit Suisse Senior Equity Strategy. That's on Bloomberg Markets, the close, 3:30 p.m. in New York. This is Bloomberg.
So Russia faces its first foreign currency bond payments due this week since the invasion. We've got some dollar-denominated ones. I think we've got some euro-denominated ones as well. Failure to pay could put the country on track for its first default on foreign debts. Says here 100 years, but we'll get Damien Sassow to confirm that in just a moment. So what would a Russian default look like? Let's find out.
Russia faces its first coupon payment on a dollar bond since its invasion of Ukraine. A total of $117 million need to be paid in interest. While that's not a lot of money for the Russian state, intricate sanctions have made getting that money to investors a lot more complicated. And failure to do so could be the first step towards a foreign currency default by the Russian Federation. That hasn't happened since the Bolsheviks refused to recognize the Tsar's debt over a century ago. Both bonds are dollar-denominated and do not include clauses that would allow for payment in rubles. That's significant. Putin has decreed that payments to most foreign creditors would be allowed, but only in rubles. So what happens if Russia fails to make an acceptable payment? First, a 30-day grace period begins. During that time, credit rating agencies will review the situation and bondholders will begin to negotiate. But with who? With major companies cutting ties with Russia, the nation would have to find a firm willing to represent it. Plus, if Russia does default and courts rule in favor of creditors, how could that ruling be enforced? A domino effect would ensue. If the state defaults, companies will likely follow. And there's about $250 billion worth of Russian corporate and sovereign bonds in the euro and dollar markets outstanding. Default could also lock Russia out of international capital markets, making it immensely difficult to raise money. The international community has already made Russia the most sanctioned country in the world. So far, China has shown willingness to continue working with Moscow. But could a default change all that?
Damian Sassower, Chief Emerging Markets Credit Strategist at Bloomberg Intelligence, joins us now to break down what this all means. Damian, thank you for joining us. What does this all mean? What happens next to some of these payments?
Well, yeah, no, I mean, that video did most of the talking for me. I mean, they're absolutely right. There are two bonds, both are dollar denominated. One's maturing in a year from now, 2022. Those bonds were trading at 103, 105 cents on the dollar. They're trading at a premium on February, in the middle of February. Now they're trading at, well, they're not trading anymore, but they were trading as low as 20 cents on the dollar once upon a time, basically pricing in a default. And then the 49s, again, you have more time till maturity, but they were also trading at 20 cents. Yep. So both of those bonds are likely to default. That's 117 million of coupon payments that the Russian government must make due in dollars. Remember, there's no fallback provision within these bonds that allows the Russian government to pay in rubles. There's been a lot of talk that they're going to start paying in rubles, and they may as well do that, but not in this case. And so if they try to do that, yes, for all intents and purposes, the rating agencies are going to refer to that as a default. 30-day grace period begins, at which point we see what happens.
The key word being dollars, right?
Yeah, exactly. And look, I mean, if you want to go to that point, the Russian banking system is hungry for cash. You're seeing local Russian depositors pulling their money out of the banking system. That's forcing Sberbank, VTB, the big Russian banks, to turn to the central bank for short-term cash for its funding needs. And so we're seeing more repo activity. Just to be clear, 160 billion in repo activity since the 25th of February. Over the previous 6 years, you never saw that much activity going back to the annexation of Crimea. So yes, no, it's basically a deterioration in confidence of the ruble.
Damian, 1998, Russian financial crisis. I think there was a default then as well, but I could be wrong about that. Became a systemic event. Could this be a systemic event?
No, I don't think so, Guy. Not to the extent of 1998. If you recall, in 1998, yes, you did have the Russian government default on local currency bonds. And part of the contagion there was, we talk about long-term capital management, but really the problems at LTCM had happened prior to the Russian default. It was just that they were doubling down on Russian local debt, which made it that much more, really inflamed the issue. This time around, we're not talking about the Russian local bonds, which, by the way, for all intents and purposes, might well be deemed in default as we speak. We're talking about the dollar bonds. Why that's so very key, Guy, is that if Russia loses access to the international credit markets, things can go south in a hurry.
So how does that work exactly? If you have 117 million, as you said, in payments that are due, and they say, we're ready to pay you in rubles, what do the creditors essentially say? Do they say, we're not going to take this, or do they accept it for what it is?
Well, Kriti, I think the real question is, what if Russia turns around and says, we have dollars sitting here in Russia that we want to wire to our account so that we can pay our creditors in dollars? And then all of a sudden, because of the sanctions, not allowed to, Euroclear or Clearstream, they're not allowed to clear those funds and allow those, entities to make those payments. That I don't have an answer for that yet. That would be new territory for me. But for the most part, you're absolutely right. If Russia does try to actually make a good faith effort to pay those dollars to their creditors, that's not what we're expecting, but that would be a whole different ballgame, to be completely honest with you.
Who holds the debt, Damian?
That's a good question. I mean, look, we just looked at this, actually, Sonali Basak and I. And so, look, I mean, some of the bigger holders are, Franklin Templeton, Allianz, the parent company for PIMCO. So, I mean, you basically have a who's who, your regular big fund houses, many of whom have it in their income funds, their large multi-strategy bond funds, right? So, whether or not that means that there's a lot of managed accounts within those fund families that have access to these very same bonds remains to be seen. But yeah, you have to assume that it's going to be a lot of international bondholders, a lot of ones that basically have access to those institutions I just mentioned.
Great stuff, Damian. We'll see what happens over the next few days. Damian Sassower of Bloomberg Intelligence on what's happening with those dollar-denominated Russian bonds. We're getting a headline coming through from the White House. This has just dropped onto the screen. The White House is discussing a plan for President Biden to visit Europe. Now, that's all the detail we have at this point. We have no idea on the timing. We'll wait and get you more detail and bring it to you. But the White House is certainly thinking about that. That would be a huge sort of diplomatic push that would result from that. And certainly Biden's efforts to bring all the allies onto the same page would be further enhanced by that. So it'll be interesting to see what the timing around all of this is. When we get the details, we will bring them to you. This is according to a person familiar, so we don't even have it fully nailed down yet that this is going to be announced. But certainly that is what Bloomberg News is reporting, that there is a potential plan for a Biden trip to Europe. We may bring back in Anne-Marie Hordern to get the latest on this. We'll probably do that at some point over the next few minutes. This is Bloomberg.
Well, let's get a check on the U.S. markets, pairing perhaps those early gains. Bloomberg's Abigail Doolittle is here to track the moves.
Yeah, it's definitely turning out to be a bit of a jittery day here. The S&P 500 barely higher, and a really wild day because at the pre-market highs, up more than 1%, then down on the open, then up 1% in the actual session, now barely higher. The NASDAQ 100 down 0.9%. Now, from a macro standpoint, we have a couple different things going on. Stocks not getting a lift yet from those headlines about President Biden potentially mulling a trip to Europe. The diplomacy of that could help. Right now, not countering. But New York crude down 7.2%. That is a tailwind for stocks, or it should be, in terms of the idea that inflation coming off. Bonds, though, take a look at this. Down a sixth day in a row. The 10-year yield at 2.1%, the highest since July of 2019. That could be seen as a headwind because there is the inflation. So you have this countering trend between these two macro assets. Let's stick with oil, though, and see where it might go if it continues to go down. How low can oil go? This is a one-year chart, I believe, of oil, maybe a little bit longer in relation to its 200-day moving average, which you can see it stays relatively close to. Well, on the huge surge recently, well above it. But there's a lot of reason here, Guy, to think that oil will, in fact, return to that 200-day moving average. In fact, from a weekly standpoint, it is confirmed to drop to that 200-day moving average, maybe below. That old idea of what goes up must come down. Perhaps that's true here with oil.
Abigail, great stuff. Thank you very much indeed. So as we've been reporting over the last few minutes, Bloomberg has learned that the White House is discussing plans for President Biden to travel to Europe. Here with the latest is our Washington correspondent, as promised, Anne-Marie Hordern. Anne-Marie, what do we know?
So we just know that at the moment they're weighing this idea, a trip to Europe. But we do know throughout this entire crisis leading up to the Russian invasion, as well as right now during this war in Ukraine, the Biden administration has wanted to make it clear that they are working in lockstep with their European partners. And this would just be another move to prove that. And this would be obviously direct diplomacy with President Biden and his counterparts. I would imagine this would likely be in Brussels, the home of the EU, as well as NATO. We should also note that it comes after a really difficult week in the sense that you did have bombing very close to the Polish-Ukrainian border, and not just close to the border, but also at a training center that NATO and U.S. individuals used in early February. So this just really amplified how dire the crisis is right now. And then you have the administration talking about potentially making this trip to Europe.
Anne-Marie, what is the goal here? What would this trip actually try to accomplish?
I think it would just mostly be symbolic, really, in showing a very, very strong united West in the face of Vladimir Putin. Remember, this is something that Putin never wanted, right? He loves a divisive West. He loved the idea of Brexit. He liked the idea of President Donald Trump talking tough on NATO, potentially questioning its existence. This is the exact opposite of what President Putin was given. He's given a very strong NATO alliance and a very strong even United Kingdom working as well, along with Europeans. Right. And you've seen that time and time again throughout this entire crisis, whether it be the intelligence sharing or following the conflict and Russia's invasions of Ukraine, the sanctions. They've been in complete lockstep whenever they can be.
Well, sounds good. Bloomberg's Anne-Marie Hordern, thank you so much for breaking it all down. Coming up next, Senator Pat Toomey of Pennsylvania joins Balance of Power with David Weston on Bloomberg Television and Radio. Guy.
Absolutely. I'm going to turn to Bloomberg Radio, the cable taking to the air at 5 p.m. in London. Remember, there's only 4 hours for the next 2 weeks between London and New York. We're live on DAB digital radio in the London area. You can also, of course, find us on your Bloomberg terminals. There are podcasts available on Spotify and iTunes as well. We will continue to follow all the news for you, though, and watch what is happening in terms of the details surrounding this potential Biden trip to Europe. But in terms of the markets right now, you've got a NASDAQ down by 1%. You've got an S&P, though, still flat, flirting with the flat line, 4206. This is Bloomberg.